morning. Good. That's much better. I thought it had something to do with the way I look. On behalf of CIO East Africa, I'd like to say thank you very much for making it this morning. We do understand how difficult it can be to make it for breakfast sessions. My name is Laura Chite, and I'm the CEO of CIO East Africa. And we are honored to be able to host you in the first event of the East Africa FinTech Summit, second edition. This morning, our conversation is going to be around business, technology, and leadership from an innovation and collaboration perspective in the financial services industry. If you look at your programs, the theme for this event is exactly what I've just said: innovation and collaboration in the financial services industry, and that's what's going to carry us through the conference for the next 2 days. But today, we would like to have an intimate conversation with you business leaders, and just to kind of unpack what the impact of technology would be in your space. And even when you're making decisions for your organization, you do understand that technology is a partner, innovation is a partner, and not an enemy or a disruptor anymore. So just to give you a little story of my experience last week. Last week I was at the Transform Africa Summit in Rwanda. And this was actually, it actually ended up being a personally transforming experience for me. So Kenya launched the blueprint for business in the digital economy at the session. I hope all of you have had a moment to quickly have a look at it. And to me, this spoke a lot of things in my mind. Having been in technology for the last 18 years, that doesn't mean you calculate my age. For the last 18 years, and I thought about it and I said, you know, technology is about transforming lives, okay? And whatever we do from a business perspective, yes, we're there to grow our businesses, but we also need to think about the impact of it and how it's changing and transforming lives today, especially in an African context, okay? So, in light with our theme, innovation and collaboration in the financial services industry, if you think about it from an African perspective, especially East Africa and more so Kenya, the adoption of technology has been very, very fast. And from a perspective of delivering services, everything is being done through the smartphone. And this is due to two things. One, connectivity, and two, smartphones are getting cheaper and cheaper. And what is technology doing? It's breaking down boundaries for us. And that means we are not restricted. So, Kenya and East Africa being in the lead from a technology and an innovation perspective, what are we going to do about business in the digital economy, considering we launched the blueprint, eh? And my challenge to the audience here today is, what is your role with regards to partnering with government, with making this happen and making it a reality and championing this across Africa? And obviously, the faster we move with this, the better for us, because it means we have opened doors for ourselves, bigger markets, better service, and we have the opportunity to even build new products and learn new audiences. The conversation, we're going to have a conversation today. We have 3 people that are going to talk to us through some very interesting topics. They'll be moderated by the CIO East Africa Chairman, Harry Hare. But before I hand over to him, I just want to say a little bit about what to expect in the fintech space in 2019. And I'll talk about just 3 things. 1, regulation. Regulation is a very important aspect of innovation. And this is because with technology, a lot of data is collected. There's a lot of fear around what's happening with my data, what are you doing with my data, where is my data sitting? And the thing is, how are we going to make sure our governments protect the data? How are we going to make sure they give us guidance around data? Because there's no way we'll be able to move with our technology and our innovation without guidance from a regulation perspective. And if it's not there, it's going to be a blocker. It's going to be a blocker. So we need to think about that. We need to think about fintechs becoming the norm. As I said earlier, they're not an enemy. They're not here to disrupt anymore. Whether you like it or not, you're going to make them your partner. Whether you like it or not, you cannot do without technology. You cannot do without innovation. So how are they going to plug into your business at the end of the day? Are you going to acquire them? Are you going to build an innovation center within your organization? I don't know. I don't have the answers. What I can tell you is that by end of tomorrow, we will have a few fintechs that will pitch solutions that some of you can pick up and adopt for your organization. And then finally, the thing we need to think about is the mobile payments discussion. It's not going anywhere. In fact, it's going global. And it's growing very fast. So, as the cradle of mobile payments, how are we taking advantage of that, considering everything that comes up that's new is sitting with us? What are we going to do about it? And how are we going to grow our businesses? And how are we going to expand our businesses by taking advantage of the fact that the cradle of mobile payments is sitting right here with us? Thank you very much. And I'd like to hand over to our moderator, Mr. Hari Hari.
So Laura has given us a quick rundown of how this session will be, and just to add on to into the discussion is we're in a very interesting space. In fact, in one of the meetings when we were talking about this event, one of the advisory board meetings. Somebody said, Africa, oh, so I'm already out of time. Okay. Okay, so we're live on Metro TV, I'm told. Excellent. Good stuff, Metro TV. Metropole TV. We've always, Africa has always been a net importer of technology. So we've always been importing different types of technology and using it in our different businesses and try to innovate around those technologies. But this is quickly turning, and mobile has been one of those areas where we're starting to see Africa exporting technology to other parts of the world. So this is a really, really exciting time to be in Africa and to be around the interesting things that we're doing in Africa. So M-Pesa is a net, we're exporting M-Pesa. Okay, I know Ali. Don't kill me, Ali. I know you're saying, M-Pesa has been over talked about, but it is a technology. It is something that Africa should be proud of. It is something that is actually influencing the different innovations globally. So this morning we're looking at collaboration. How do established organizations which have structures which follow masses compliance and Stephen's policies, very structured organization, how do they collaborate and co-innovate with startups which they decide, we don't have any structures, we are agile, we move when we want to move. Today we'll be working on this, tomorrow we'll be working on something else. How do you bring those two, because those are two very different types of organizations, but yet there's so much room for them to come together and actually create value. So how do we have a safe point? How do we have a sweet spot for these two kind of organizations to actually work together? So this is part of the discussion that we'll be having now and also in the bigger conference. So to start off, just give us thoughts, provoke our thought, because we're going to have a discussion, and just make sure that you put your points together, because I'll call anybody to contribute to this discussion. So I'll invite Bernard Oviambo from Kenya Investment Authority to just give us his thoughts, very quick thoughts, on how collaboration generates opportunities in the fintech space. Bernard, karibu.
Good morning, ladies and gentlemen. 2 days ago, when my MD told me that, hey, young man, I need you to go and step into my shoes in a very high-level summit. Then I told him, but Daktari, you know that your shoes, if I'm putting on number 9, then I should triple it so that it will be number 27. Will I even be able to walk? But he told me that I know that you can walk in my shoes. And with that big name that he has, we are here. And first and foremost, I want to thank Cio East Africa for organizing this most important summit. And ideally, they say that sometimes we don't get our strategies wrong. It is only that we fail to catch up the train. When they say that trains are always coming and going, there are some trains which come once in a lifetime. And if you miss it, then you can only but park and leave the playing field. So, ladies and gentlemen, industry captains, distinguished guests, one of the most difficult things in life, and especially when it comes to sectors that are very agile, is to try to put them in context, into perspective. And one of those are sectors that are further to technological innovations. And that's where fintech comes in. For those of you who can still remember your biology classes, there was this one single-celled animal that was called amoeba. Now, amoeba was an animal that would, an organism that will change its shape in quest for survival. That if you tend to define how it looks like, then you'll end up saying that it is circular. The next moment it is oval. So you can't really catch up. And the amoeba of our time is the innovation that is synonymous with technology. And the disruption, as we say, that it causes in various sectors that it interfaces with. Now, the evolving intersection between financial services or as it, and technology, or as it is known, fintech, has left incumbents catching up owing to its appeal to the modern customers. It makes life easy. So the incumbents are trying to catch up, keep up with the innovation and financial services sector. And it's almost rendering the traditional brick and mortar kind of service irrelevant. Because who would like to go to the banking hall? We can all transact virtually. And you see, clearing of checks, which you want to wait for 2 days and all that. So there are the spaces that technology and financial services intersect to ensure that our lives are made more easier. This evolution has not only impacted on financial service institutions, it has also caught regulators flat-footed. Usually, they say that regulation precedes innovation, such that when innovation comes, then you find that there's really a playing field on how to manage innovation. But in this situation where now technology intersects with financial services, then we find that innovators, regulators, do not really know what we do. You see, if it is mobile money platform, then you'll ask yourself, okay, CBK has a hand, although they don't run any bank. Then you ask yourself, is it Communication Authority of Kenya because it is on telcos? So again, you find that it is a bit fluid when it comes to regulating that space. And again, some of them, you don't know where to place them. Blockchain technology and artificial intelligence. Then you ask yourself, so for us at Kenya Investment Authority, our work is to support investors, to ensure that we hold their hands from pre-investment phase to post-investment phase. So sometimes we also find it difficult to really fix fintech to various regulators that we have in government. But given that we are in government, we always find our way around. Now, I would liken fintech, if you do the BCG, Boston Consulting Group matrix. Now, the fintech is in the star quadrant, really rising, still trying to gain acceptance to most traditional industry players who they should be partnering with to deliver services. And for regulators to manage, then a collaborative approach is the only way, whereby we bring in, I know CMA has done quite a lot in terms of having a regulatory sandbox, where those in the fintech space can be given a space to prove their concepts so that it can be accepted in the larger market. Now, amidst all the hesitation and the fear that has been overcome to some extent, we still have challenges. And these are proving to be a hurdle to opportunities that are presented in the fintech space. Now, some of the challenges that we have seen is that the innovators find it hard to achieve scale and reach, because they don't really have a platform whereby they can be handheld and supported to reach out to the market and to achieve that wide acceptance that they need to provide these solutions. And then most of the funding institutions, whether they are banks or equity financiers or joint ventures, will want you to present maybe some business plan to prove that, okay, fine, this is how the return of investment comes. So how do you package a technology that has never been tried to prove to a traditional financier that if you fund me, then I'll be able to get a return and be able to pay my loan back? So again, because innovation does not really align to the traditional funding model, the innovators really find it hard to get finance to kind of push their ideas forward. Then visibility and awareness, whereby sometimes the hesitation will make the industry players feel like they are under threat, or the risk is just too high, too much to accept. And then there's regulatory issues as well as building sustainable income streams because of lack of that acceptance. Now, to advance this collaboration, the financial institution and fintech need to be more open-minded, tolerant, and accommodative to facilitate rather than hamper innovation and transformation. If there is this mutual kind of coexistence and codependency, then the incumbents will leverage on the solution provided by the fintech to provide more customized services and faster delivery of those services to the clients. Now, this effective collaboration, as I finish, will open opportunities that are seen in the mobile facility real-time payments, so that instead of having to wait for 2 days to have your payment cleared, I believe that the fintech players can provide solutions for real-time payments, whereby you just authorize and there you have your money across banks and even in the insurance industry. Now, automation and continued digitalization of services so that we do away with the paperwork, the normal brick and mortar services. And then open APIs, that is application process programming interfaces, whereby third players can access data of the mainstream players and develop solutions around the data that they can access, so that they can provide more customized solutions, as well as new business models, so that we can customize how the financial sector experience is. So data analytics and in artificial intelligence is another area whereby it will help consumers to enjoy new products, improve existing products, and increase efficiency, businesses and processes, and pursue new discoveries that offer innovative business opportunities. Ladies and gentlemen, if the incumbents don't collaborate, then they'll be rendered obsolete within no time. Thank you so much.
Thank you very much, Bernard, for that thoughtful kicker of this session. You closed on a very bold statement. Do we have any incumbents? I can see a few. I can see a few. So you've been, you know, this, as they say in the millennial age, shots have been fired. So just say, but it's collaboration is the way to go, I believe. One interesting thing that Bernard mentioned was the challenges that actually incubators, challenges that regulators are having. Where do you regulate a tech startup that is operating in health, or a tech innovator in manufacturing? So that, I don't know whether it calls for a super regulator where, you know, we move now into regulation 2.0, and this is the best time to call in Mercy, because she's from a regulator, and I know she'll be talking about data protection, but she's very, very experienced around regulation. Maybe she can throw some light around this as well. Mercy is the Director of Legal Services at the Communications Authority. Karibu, Mercy.
Thank you very much, Harry. Good morning. I think this summit is coming at a very good time. Having just had the Transform Africa Summit in Rwanda, where the conversation and the narrative was that each of us has to begin to tell our story. And when I tell my story my own way, and you tell me your story your own way, we will find a point of confluence. And when we find that point of mutuality, together we can move forward. So speaking to this topic today, I like to liken fintechs and that space of IoT to UFOs. You remember the movie E.T.? You know, when E.T. came on Earth, never seen, not understood what on earth is going on. Then you discover that the UFO might not be as bad as you thought it was. And this is what the fintech space has brought to the regulatory element. Never anticipated within the regimes and the landscape that we had conventionally, this was never ever catered for. So it's the guest who has come and is not expected or understood, but we now have seen, and I think we all have experienced, how revolutionary the experience can be for all of us. So talking into collaboration, I think of the African proverb that alone you can only walk so far, but together you can really do so much more and be better together. And the fintech space combines the financial services sector and the telecom sector, and is a contributor to the increased convergence that has posed a challenge to regulation, because the regulation was tailored for a silo space that was very specific, very traditional, very clear and concise expectations. Then enter fintech, and governments, many governments, including Kenya, jumped on it because they could see the dynamism that it presents in terms of delivery of services to the citizens and economic progress. And it led to a bit of an awkward situation, if I may say, because with this kind of convergence, you certainly realize that territories are changing. Every regulator enjoys its space and likes to flex its muscle in its space. I see Maura here, who we've worked before, where he would flex from the financial services, and we come and flex from the ICT sector. But now, with convergence and fintech being a symbolism of that, it now begins to sound like the space that I used to flex in, we are now sharing, because sharing is caring. You know, so we have to share that space for the greater good. Collaboration is important because the user who is on the ground is the one who is best placed to understand the pain points, is the one who is best placed to actually propose a solution. And this then helps because the regulator, having certain traditional set systems, like has happened in our sector, could be very much at risk of being irrelevant. The speaker just before me mentioned the issue of one being left behind, because innovation, in a very ideal situation, should be preceded by regulatory frameworks. But this hardly ever happens worldwide. You find that often the innovation goes ahead and the law catches up. And one of the areas where that is very evident is, for example, in the tax systems. People find creative ways to go around the law, then the next time in the finance bill, there's a change. Then they find a new way. So it's the same thing in this space. Let's look at some of the factors that really have driven the need for collaboration on innovation in Kenya. One of them is the speedy growth of the mobile network operator, and therefore presenting solutions. The second one is a lot of heavy innovation driven by startups, so that they come in with solutions. They are limited scalability, and they need to be fine-tuned in order to be able to drive a solution. This has been very, very disruptive to the traditional markets and even to the traditional regulatory platform. In Kenya, we also have a very high literacy rate. So that has promoted the uptake of this kind of services. But then the counter to that is, much as we may be very highly literate, are we as literate when it comes to the ICT side? It is lower. What then does that mean? It means the consumer is left quite exposed in that kind of space as they try and enjoy this kind of services. And these are the concerns that the regulator wakes up to see how to have a balanced approach. So when you find that many regulators are coming together over a common issue, in this particular space we are talking Communications Authority, Central Bank, and to some point the CMA, it then poses the question, I used to behave this way in the past, how do I behave going forward? And the response in Kenya has to be to adopt the approach of collaboration, and that collaboration has led to forbearance in many ways. Forbearance meaning, I would want to regulate this, I would want to regulate it in the traditional way, but let me step back and watch what's happening and put in parameters where necessary. Sorry, I have a cold. It has also led to another thing, advocate for the consumer, because the consumer is not as aware. And then thirdly and lastly, the need to partner across from the policymaker, the regulator, and the industry to make these things happen. Experiment, make mistakes, forbear, study the issue, and based on the outcomes, then you know what kind of profile regulatory platform to set up. So I think what we are saying, just to end this, is we all have to have some skin in the game. It can no longer be a situation where one person drives it as solo and waits for the others to follow. We all have to get in there, work at it together because of the benefits that have been perceived. And once that is done, then you're able to move to the other. So I think we have no option, and I agree with the past speaker, we have no option but to collaborate and to partner and to call each other out so that we can all be better together. Thank you.
Thank you very much, Mercy. Forbearance, advocate for the customer, experiment, partner, and collaborate. I think those are the key words from Mercy there. Our next speaker will be William Lawrence, the Principal Business Solutions Manager from SAS. William?
Good morning, ladies and gentlemen. Thank you very much. It's an absolute pleasure to have the opportunity to speak to you today. And really the previous two speakers made some very, very valid points. And coming from a vendor or an OEM within the technology space, we've obviously had to adapt to what is clearly a rapid change within the IT tech, the IT or the fintech space, and really SaaS as well as the other OEMs in the fintech space really have to be able to evolve rapidly in order to meet what your demands would be from fintech players within the space. So as Harry kindly introduced me, I'm with SAS, which is an American headquartered data analytics company, and I'm based out of Johannesburg. I look after the fraud and financial crime software solutions across Africa. So just very quickly, for those of you that are not aware of SAS has been in the data analytics game for the last 42 years, since our inception. We're the largest privately held software company in the world, and in fact we have a very mature set of offerings within the fintech and financial services space. So really what SAS's focus is transforming a world of data into a world of intelligence, and it really is about addressing the needs and anticipating a lot of the needs that the corporates and the players within the fintech environment are going to meet. So for example, our core principles include things like flexible user experience. So that is really about taking and making analytics available to a large variety of users of analytics within an organization. If you think a number of years ago, analytics was a very vague topic that was kind of limited to data scientists or programmers sitting in a dark room at the back of an organization. That has completely changed. Analytics is now available, and in addition to that, all the other benefits of analytics to multiple users within an organization. It absolutely still includes the data analysts, but more and more so, it's being made available to the business users, to, for example, somebody that is not a programmer, that's not a data scientist. However, he understands the data that's available to him. He also understands the business problem that he's trying to solve. And it really is about the challenge for organizations like SAS and the other providers within the data analytics field is to make and to enable multiple users within an organization. So that would mean making data easily available and accessible, and making analytics available and accessible to multiple people. So you would have noticed that a lot of the OEMs have enabled that kind of capability. The second core principle is openness, and that really talks around the platforms that the OEMs use to really embrace things like open source technologies. If we look at the universities nowadays, the graduates coming out of university, they've been raised on a diet of open source technologies. So really the analytics space has exploded. If you look at 10 years ago, there were potentially 5 serious data analytic players across the world. That has completely changed. Open source has completely changed the game. And whereas a proprietary software vendor like SAS, we absolutely embrace open source, because open source has a very valuable role to play within the data analytics environment. And it really, the challenge for organizations like SAS is to embrace the open source technologies and to be able to accommodate open source users within a full data analytics platform. The third point is about learning and automation. So obviously big buzzwords, artificial intelligence, and subsets of that being machine learning and adaptive learning. The reality is machine learning has been around for a very long time. If you look at for example, IBM, SAS, a number of the other vendors, they've been developing machine learning algorithms for many years. The other issue that's emerging from a artificial intelligence perspective is stuff like robotic process automation, and therein, if you take within the business solutions that the vendors provide, to automate as much of the human mundane tasks as possible is really where you want to be. So typically, if you look at the analytics life cycle, historically and in the not too recent past, you would probably spend 80% of your time collating data, trying to clean data up in preparation for an analytics phase. So it's kind of, you spend 80% of your time collecting the data, cleaning it up, and you spend 20% of your time actually getting value out of the analytical process. So really what for example, an organization like SAS strives to do is to turn that around, is to automate as much of the data collection, the cleansing of data, automate as much of that as possible, and free your time up to spend 80% of the time really getting value and insights out of the analytical process. The other core principle is around digital guardianship. So yeah, we're talking about things like data governance. We're talking about things like model governance, which are critical if you're going to base business decisions on some analytical process or that you've conducted. Obviously, it's key that you, as a user, that you are satisfied that the data that you're working with is accurate. Everyone within the organization is looking at a single truth element of data, that we're all working off the same data, and that we have confidence in the integrity of that data. Similarly, models. If your business is being driven by analytical models that are being created, you need to have confidence in those models. You need to be confident that those models have been properly conceived, they've been properly tested, they've been properly governed. So that then takes me to the last piece, which is around analytics orchestration. So this is where we seek to provide a single analytics platform across the organization, so that you leverage off things like efficiencies of data sources, efficiencies of process, where you're not duplicating multiple sets of the same data across the organization. So my focus areas, as I mentioned, is fraud and financial crime, or rather the prevention thereof. But it really is about restricting the duplication of data within the organization. It really is about being able to consider different options for hosting your data, for running your analytics platform. So historically, and specifically within the financial services sector, nobody dreamt about looking at a hosted or a cloud service provider because of the confidentiality of data. The reality is nowadays that financial services industry has come to accept the fact that the hosting landscape and the organizations that offer hosting or cloud or cloud capabilities have in fact got security protocols in place that invariably a bank or an organization wouldn't have. So I think that the industry is slowly accepting the fact that the data, and from a data confidentiality perspective, your data is okay if it's in the cloud. And being hosted by an external organization. So it is really from a fintech provider or technology provider, it really is about accommodating these various options or making them available to organizations from a data perspective, from an analytics platform perspective. So that really forms the basis of the SAS's approach to technology, and irrespective of whether you look at the risk solutions, at the fraud solutions, at the regulatory compliance solutions, certainly the principles are pretty much carried through. And it really is, I mean, the earlier speaker spoke about the rapidly changing environment, and technology is obviously a key part of enabling an organization to stay abreast of that rapidly changing environment. Thank you very much.
Thank you very much, William, for that presentation and education about what SAS does. Just to mention that SAS are the ones who bought the breakfast, not us. Thank you for the sponsorship. So we now go to general discussion, and I want to just invite you to give interventions into the different presentations, but you are also free to just, the question I asked, how do we create an environment where the players within the space, within this industry, can collaborate, can co-innovate to build and deliver value to the customer. I can see Ali up there. Humphrey, I need help. And don't be controversial, yeah? It's like telling you not to breathe.
Mr. Chairman, you're giving me a bad rep. I have a question for Bernard, Kenya Investment Authority. There's thinking around the country, whether it's a misconception or a correct one, that the Kenya Investment Authority looks only outside investors and has nothing for local investors. Would you disapprove us of that notion, or would you confirm that? And if you have something to offer local investors, I think maybe there will be we need to have a better communication around that.
Thank you so much, Ali. Thank you. As rightly put, there's a misconception that we look more outward than inward. But I think there's been more hype on foreign direct investment, because you find that the first investment promoters are in the high hierarchy in government. So the president markets the country, the cabinet secretaries market the country outside there, and invites investors to come. At Ken Invest, one of our strategic objectives is to build the next multinationals through support to our domestic investors. That is running from 2018 to 2022. So one thing that we are doing is to leverage on the competence of foreign direct investment to build up the capacity of our local investments. And one key component is linkage. So we're trying to link within across various value chains, to link our local players to the value chains of the bigger multinationals, so that through that their competence is built and they're able to gain market confidence and reach out there as well.
I think, again, we are making reference to Transform Africa, because I think Dr. Mukisa Kitui proposed that investment authorities in Africa need to actually start looking at the startup ecosystem and actively and purposefully drive investment into those startups. I think that was a very loud, he almost got a standing ovation for that. Any contribution to this? It could be a question, it could be an addition to the discussions.
Good morning. Mercy mentioned my name, and therefore I have to first of all thank Mercy for mentioning my name early in the morning. I am very keen to appreciate that you started by saying Kenya got it right with the issue of mobile money. We've been interviewed when I was in the central bank over and over again as to how did we get it right. Because in many cases when you watch our TVs and what have you, you notice we don't get it right. And especially in the space of technology. So this is what you would call an outlier in the statistics. And that brings me to, because some of us, and Mercy said we should tell our story. One time I was being interviewed by a magazine in the UK, Speed, as to how did you get it right when many other countries were not getting it. And it makes me now want to tell you the story, which we should also be almost always telling, so that as we go forward, we find how we put this together. And I can tell you, in the space of mobile money, we always want to thank Dr. Demo, who wrote to the central bank, I have that letter with me, asking the central bank, what do you think about this new product called mobile money? That is a letter written from government. Why? Safaricom had gone to the line regulator, Communication Authority. And the Communication Authority had told them matters to do with money are only handled by the central bank. And on the side of the central bank, before I came to national payments, the letters which everybody used to receive, you have applied to do something with money, and then they quickly rush to section such and such of the Banking Act. And that is the way our technical persons operate. Immediately they get your letter, they are very efficient in replying, but inefficient in that the answer actually takes us on a very different tangent. The letter was, you've applied to handle money. According to section such and such, handling of money is done by banks. Therefore, you are required to apply under the Banking Act section such and such. That to me tells me the greatest challenge we have in this room, and I am glad the Kenya Investment Authority is here, CA is here. The greatest weakness we have is the capacity of the regulator to see beyond a law which was written in 1920 and is answering questions of 2000. And that is actually how we started the game. And let me now take you very quickly to what made us really get it right. After that, we looked at that letter and we subjected it to convergence. We brought together, Treasury brought us together. There was a meeting in Treasury, I have the minutes. It brought together, where you are talking about collaboration.
Stephen, where are you keeping government documents?
Because they're in my head, they are nowhere else. They are data protected. But I want to say quickly, so that I take you where I wanted to take you. We did something else which we normally don't talk about, research. And I want to thank FSD Kenya, because FSD Kenya came in, David Ferrad, and we started doing research on how we can regulate mobile money. There is no good policy that will come from talking to each other through media. Good policy will come from research. So even as much as we are talking here, there is need for capacity of the regulator and good research. So when we subjected ourselves to research, it took us 2 years to authorize M-Pesa. And the regulation, why it works, is because people always say regulation comes after. Nothing like that. It came before. We collaborated a lot with the Communication Authority. So let us always look at research. And even as we talk, because I know we are going to be in this forum, even as we talk on the way forward, if you don't subject these things to research, you come up with a policy that is horrible. Research, capacity is what drove us. People think that M-Pesa was authorized or mobile money was authorized without research. I can show you 2 years. FSD Kenya brought us one, David Porteous, and we did a lot of work. I even had to go to Washington. I got information from Philippines, South Africa. So we did a lot of research on e-money. And it is through that research that we have sustained a step ahead, not a step behind. And as we talk, because I know in this workshop we're talking about fintechs and lending, what is missing is research. We are hearing people talk, but there is nobody talking about research. Let us agree that there is no policy without research that is going to take us anywhere. And there is no way, if you don't have that capacity, you are going to take this country forward. Unfortunately, and let me add there, in Kenya we have a problem of doing things right and then backtracking, and we go back to right behind everybody else. Let us be very careful.
Okay.
Thank you very much.
Yes. Yeah. Please introduce yourself, then we can start.
I'm Paul Kioi, govern technology at First Chartered Securities, which is a local group of companies. I think I have to respond to what Maura is saying, probably to summarize it, that probably M-Pesa happened despite the regulation, rather than it happened because of regulation. And one of the things we need to see is why have we not been able to replicate M-Pesa, let's say, in other technologies, even in energy, even in water, even in agriculture. We have not. Meaning that regulations, and probably this is why I want to bring in the CA, is that we probably don't have structures within our regulators that actually look at guiding rather than regulating. That forbearance, and thanks for the word, because it's more of a passive way of saying, let's see how things go. But I think it needs to be more active. My question is, do we have structures within the regulators that actually guide technology, guide people, guide even the users to adopt the new technologies? Because if we let the businesses to go through the hand of regulation to bring in the innovation, it takes much longer. Let's have it led by regulators, have the right structures, and I'm not sure how to take to get the regulators to have a different arm altogether that purely looks at innovation and guiding the investors to put the right technologies and to put the right use cases. Thank you very much.
Interesting discussion there. I remember this one time many years ago where there was a lot of policy and regulatory discussions going on, and the then PS, Dr. Ndemo, said, do what you have to do, then ask for permission later. Any other intervention on this? I'm looking for us to be able to openly sit on a table. I'm the regulator, I am a startup, I am a bank. Have a discussion and say, okay, startup A, you have this product, it looks very interesting. How can we invest in it? Those are the discussions I want us to have. Is there room for that even? Or am I just, maybe I was smoking something in the morning?
Ladies and gentlemen, thank you. Good morning to everyone. I'm Chris. I'm the group head or the African head for Kinesis. We're busy looking at Africa as not as an opportunity, but more as a future to world finance. Bit of my own background. I left school at the age of 16. I made a decision to leave school, based on the fact that I want to become an entrepreneur. Look at people, develop the markets, develop rural people, because that's what my big passion is all about. So, through my own experiences, I walked a path with the South African government, with other role players in Africa as well, and we basically ended up pulling together a couple of critical role players that was able to deploy solutions in rural areas in South Africa on developing via education these individuals. In 2011, 2012, I joined a good friend of mine, Donald Shawn, with M-Pesa in South Africa. At the very beginning of M-Pesa in South Africa, and we developed the vendor system, whereby we encouraged local entrepreneurs to add their value into the growth of alternative financial systems on the street corners. The big thing for us in South Africa is that the banking sector, the regulatory sector, killed fintech in South Africa very early on. If things were different, South Africa probably would have taken leadership in the fintech space in Africa. And that is why I envy Eastern Africa, due to the fact that you guys have it all going for you. The innovation, the energy that's driving this force is absolutely amazing. So from a regulatory perspective, this is not only based for the regulators, it's also based for all the different governmental sectors, be it education, be it finance, be it whoever you want to add to the table. They all need to come together and say, listen, where do we want to go with this? Do we want an educated population? Okay, do we want a population that will grow? For argument's sake, in the future, with virtual banking, you'll have a branchless banking environment. But why not replace branches with education centers? So, in other words, instead of advising someone on how to, spend their money, advise someone how to manage the money, educate them on the financial situation, the global financial situation. So you won't have a bank manager anymore, you'll have an education manager of a specific location. And there's enough money and resources to pull this together in East Africa, and enough buy-in, I think, as well, at this scale, to make this a reality. So instead of becoming a society that's more reliant on big corporations and so forth, become a society that is reliant on the success of its communities. Once we get that balance right, I think that East Africa will definitely lead the fintech environment for Africa, and also export technology. So this is a holistic, this will be an holistic approach from all sectors of society, be it civil sector, be it your governmental sector, be it your private sector. Everyone needs to buy in on this idea, on this common call, that this is the direction that we're going to take. We're going to bring in all the education providers, we're going to bring in all the governmental providers, and we're going to make this a reality. Thank you.
Thank you very much. Thank you very much. Okay, so I'm gonna change gears a bit and ask direct questions to direct people. Rose, what is the next big thing in your space? Where you work? The next big thing.
Right, so I'm from startup. It's a digital lending company. It's called Tala. So the next big thing, actually, because data speaks to everything that the consumer is doing, and what we're looking at, especially when you view the top 3 reasons why they borrow, apart from the usual, they want to start a business or to grow a business, one of the main ones is also with regards to health. So I'm seeing one of the big things being, we know insurance claim to be as innovative as possible, but this is where we need to partner as well, to look at why should a customer be affected whenever they borrow for health purposes. And it's obvious, whenever they borrow for that, their repayment is not good. So we have the data, the insurance sector has the products, they've been doing it for years. So that's one of the things I'm looking at as a big thing to get into. And then also the payment space is becoming as more and more versatile. So from what the central bank is looking at, I think it's a space which we will see more than just mobile money. We'll see a lot of versatility, speed becoming even faster in terms of how you're sending money, what are the thresholds. So those are the 2 things I would place a bet.
Okay. Kamau, what's the big thing in within your area?
Thanks, Harry. I think from a credit bureau space...
Just introduce yourself first.
Kamau Konyia, CEO, Credit Info, Credit Bureau. I think from a credit bureau perspective, we've really transformed from the traditional bureau that was, data in, data out based on repayments. What we're looking now at is, and it's becoming more and more obvious, is trying to understand an individual's behavior based on unstructured data. So it's no longer about your structured reported data, but how can we access more unstructured data to get a better understanding about the individual that you're dealing with? Because the whole financial inclusion is now not just about inclusion that has been achieved, it's now about affordability and responsible lending. And for us to be able to get to that level, you need a lot more data other than just what we're looking at in terms of repayment data. So I think the big thing that we're looking at is how is the data sharing space, the regulations, the data protection acts that are coming out, how will they be crafted in a manner that will enable individuals to be able to access their services easier, freely, and at a more effective cost, to be able to meet, to Rose's point, for medical cover. How do I get an affordable rate that is fit for me based on the data they're seeing of me?
Before you give out the microphone, there's a letter that has been circulating. Do you have any comments on that?
Yeah, so I think trying to be as polite as possible.
Yeah, we're not aware.
So
oh, you're not aware? Are you in the fintech space? Okay, Kamal will explain what it is.
So there's a bill that has been proposed in Parliament to repeal the credit bureau, about the whole credit bureau regulations. I think there needs to be an understanding. Majority of the data that is held in the bureau is positive data on borrowers. The bill is proposing, because of the 15% of the individuals who have in actual fact not paid and have been reported as factual information for not being paid, are to be rewarded, but the 85 who are paying are to be punished for their good repayment record. I don't think it's fair. What is seen as a bureau is factual information. If you're a good payer, you'll access funds. If you do not pay, then, fact is fact. It cannot be changed.
Okay, so now you know. Fiona, any legal things we need to be thinking about?
Yeah, from a legal perspective, I think the industry we have also been disrupted with the coming of fintech. There's an obvious skill gap, because whatever you're looking at right now in contracting is not what you were looking at before. It's not just dispute resolution clauses. It's not just, the term of the contract. Now you have to understand SLAs. Now you have to understand the product specifications in order for you to protect your client. So we've had to also just join the bandwagon, so that as technology goes, we also go. From when it comes to regulation, it's not possible to regulate before the innovation. Anticipatory legislation is not possible when it comes to innovation. The whole idea of innovation is how dynamic it is, how fluid it is. So it will be a high standard to say, let's regulate before we see it. Yeah. The problem comes in when the regulator is too far behind now. Then there's a gap. And I think, let me not preempt one of the sessions we are going to have with about regulation. But then, we're going to discuss how do we bridge that gap. There are a few things we can do, and that's what we're going to discuss. But let me just say this. It will be foolhardy to say the regulator should go in front of the innovator. There's no such thing as anticipatory legislation when it comes to innovation.
There's an anticipatory bail.
There is.
I want to bring in Agnes at the back. What's the next big thing that you're seeing where you are?
Good morning.
Just introduce yourself, please.
Agnes Gadaya. I'm the CEO of Pesalink. I'm described as the fintech for banks. So currently, I think what has been happening in the banking industry as relates to fintechs, I think Kenya is one of those places where there's a lot of friction in other countries between fintechs and banks. But banks in Kenya have tended to not only embrace a lot of the fintechs, but also are starting to build their own fintechs internally. Now, what we are seeing is that there's been a lot of innovation, and we are all really rushing forward. And we are implementing great new things from a payment space. Of course, we are getting faster, more convenient, and we are making all our customer wishes come true. However, in so doing, what we are finding now is for most of the industry, there is some pause taking place because we are running really fast forward without necessarily securing our backends and without ensuring that our backends can actually deliver on what the fintechs are coming up with in an extremely secure environment. And I think that alone is now creating an issue or a problem from a cybersecurity and fraud perspective, where there are gaps between legacy systems and these new things that we're coming up with. So a lot of thought right now and a lot of investment is being made in securing the back end so that a lot of the vulnerabilities that were created through this rush into innovation are actually sealed off. So right now, a lot of the banks, a lot of the financial spaces, including the lenders, what we are seeing is a pause where everybody is now securing their back end or trying to secure their back end before we rush forward. But in terms of payments, how much faster can we get? I don't know. Thank you.
Okay, thank you very much. Now, I just want to give our three speakers 1 minute each to just make concluding remarks before we call this session to an end. Maybe I'll start with William here.
Right. Thanks very much. So really, the point raised by the last speakers really the securing the back end, but at the same time trying to pursue where the industry is going, and really the obviously the way to go forward with this is a synergy between the technology, between people, and between the processes, and really it's about addressing both the legacy systems and the new innovations hand in hand. Thank you very much. Thank you. Very valid point.
Thank you so much, Harry. What I will say is that you posed a question that how do we marry regulators, facilitators, and innovators. Now, one critical thing that we should start thinking about is if there can be a collaboration between industry players, say like Kenya Bankers Association, with the regulators and then innovators. If we can have more of a shared regulatory sandbox, whereby the innovators can be given a space to try their ideas. If it works, then it can be promoted in the market. Then that will be one key way of ensuring that we bank on innovation to provide feasible and practical solutions in the financial services industry.
Sandbox.
Thank you. I think listening to the industry, what I pick is that we need to really deepen and structure the conversation between industry and the regulators to drive forward and listen to the different perspectives. And I think this will really call for a change of mindset, change of regulatory mindset, change of industry mindset, so that we are able to really elevate the conversation and come up with solutions that can be tried and tested in order to pave the way forward. Fintech has come, it's here to stay, and we have to accommodate it.
Excellent, excellent. Thank you very much. I want us to just give a round of applause to first ourselves, then to our lead speakers. Bana, a big clap. And I also want to thank Metropole TV for airing this live. This discussion was all live on Metropole TV, so thank you for that. And now I hand over back to CEO.
CEO has a name, it's Laura. So on behalf of CIO East Africa, thank you very much for the engagement we've had this morning. I think there's quite a number of things that we've discussed that's very exciting, that's going to be able to propel the financial services industry to the next level. As I said earlier, the role of CIO East Africa is to drive thought leadership discussions like these, okay? And as the magazine says, we focus on business, technology, and leadership. So next time we send you an invitation to come in and have a discussion like this with us, please do not ignore us. Give us some time. Come and join us. I promise we'll only take 1.5 hours of your time and give you some breakfast to kick off your day. And I'm sure you will come out of the session having enjoyed the discussion. Thank you once again and have a fantastic day. Oh, and before I forget, we have the session running in the next room. So those of you who'd like to join us for the rest of the day, you can please join us in the next room. We'll be kicking off in exactly 5 minutes. Thank you.